Hey everyone, welcome back to the channel. It's mid-March 2026, and we're updating our project forecast for the quarters ahead. We'll cover expected stagflation pressures in Q2 and Q3, a potential recovery in Q4, the new Fed chair confirmation around May or later, betting market odds on the Iran conflict ending by month, and our base case, a roughly 20% correction sometime after the new Fed chair arrives, but before Q4 begins. This aligns with our project patterns and echoes comment from analysts like Tom Lee, who has flagged a potential 15 to 20% bear market-like pullback in 2026 as markets digest new leadership and policy shifts. Let's break it down quarter by quarter. Q1, where we are now. Markets remain resilient despite early year volatility. Solid earnings and AI tailwinds support rotation into value and internationals, helped by dollar weakness. Geopolitics adds noise. Betting markets give only a 9 to 30% chance of the Iran conflict ending by March 31st, per Polymarket and similar platforms. We expect Q1 to finish with modest gains, but in these below ATH grinds we've studied, patience is essential. Q2, stagflation risks emerge. Slowing growth meets sticky inflation from supply chains, energy, or trade frictions. Iran odds improve. Around 51% chance of resolution by April 30th, rising to 60 to 69% by May 31st. The big wild card. New Fed Chair Kevin Warsh confirmation, expected to wrap by May 15th, the end of Powell's term, but possibly dragging later due to Senate or DOJ hurdles. Here's the dilemma for the new chair. How do you cut rates to support slowing growth when inflation remains persistent or even ticks higher? Easing could fuel more price pressures, creating a policy trap. This setup amplifies our base case for a roughly 20% correction, likely triggered or deepened sometime after the chair transition, May or later, but before Q4. Tom Lee has highlighted similar turbulence in 2026, viewing such a pullback as a potential buying opportunity rather than the end of the bull. In the project, this reinforces risk management. Diversify, hedge volatility, and avoid chasing highs. Q3. Stagflation lingers. Growth deceleration with stubborn inflation, possibly worsened by lingering trade or energy issues. Iran odds climb higher. 67 to 78% chance of resolution by June 30th. Suggesting a possible de-escalation mid-quarter that could ease oil and supply pressures if it happens. But if the conflict lingers, it fuels uncertainty. The Fed chair dilemma carries over. Sticky inflation might limit aggressive cuts, adding pressure on multiples. Defensives and commodities like gold could outperform here. Our project view: expect sideways grinds or corrections, normal in regime shifts, so stay patient and disciplined. Q4. Recovery signals strengthen. As stagflation fades and broader earnings broaden beyond AI, policy adjustments post-chair transition could support year-end rallies. Iran likely resolved by then, if not earlier, reducing drags. Consensus sees S&P upside of 9 to 14% for the year overall, implying a positive finish if fundamentals hold. The 20% correction, if it plays out earlier, could set up a classic rebound, aligning with Tom Lee's view of pullbacks as opportunities in ongoing bull cycles. In summary, Q1 resilience, Q2, Q3 stagflation tests, Fed chair dilemma, and May plus transition adding risk. Our base case, 20% correction post-chair arrival, but pre-Q4 and Q4 recovery. Iran betting markets point to mid-year de-escalation. Low odds March, 60 to 78% by May/June, which could help. Not full bearish, but prioritize risk management, as we've discussed in the project. What's your view on the Fed chair dilemma or the correction timing? Comment below. Like if this forecast resonated, subscribe for more updates, and hit the bell. Thanks. Stay prepared.